What is going on, everybody? It's Stas here. So the markets did pretty well today. We had the S&P and the Russell up 0.3%. The Dow broke even, but don't worry because the NASDAQ 100 crushed it. It went up 0.7%. So today we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button if you guys find value, and feel free to check out my Patreon. It's linked down below if you guys want my buys, sells, call outs, morning update videos, plus more. All of that's on Patreon. And with that being said, let's get right into the video. So what we're looking at here is the 4-hour chart on SPY, which you guys should know at this point tracks the S&P 500. And if you guys have been watching my videos the past couple of days, we've been talking about an inverse head and shoulder on SPY, and not the one that you're seeing right here that I have outlined. It was actually a different one. We were looking at the left shoulder being around 435, the head at about 427, and obviously the right shoulder being around 435 as well. But as we all know, well, at least some of you that have been watching my videos, we covered how we broke under 435. That right shoulder pretty much threw itself out the window. And I was doing my analysis prior to me filming this video, and I discovered a new head and shoulders, an inverse head and shoulders, that is, here on the 4-hour chart, which you guys can now see outlined right here on my chart. We have the left shoulder at about 430 to 435, pretty broad range, pretty much more like 432, where we double bottomed back in the end of September. We got the same head as the previous inverse head and shoulder we were talking about, and now we have the right shoulder right around 432, 433, where we have been finding some sort of bottom the past 3 days of trading here. So this is what I'm seeing right now, guys, on the 4-hour chart, a clear-cut inverse head and shoulder. And with the way the markets reacted to the CPI number earlier today, which we talked about in my video from earlier today, go check it out after this video, of course, it seems like the markets want to go higher. And again, with this inverse head and shoulder being intact, we could be going higher. I'm thinking we could start pushing maybe 440 again. Maybe we break that 180 SMA on the 4-hour chart, which is right by 440, and we could start pushing up towards the mid 440s, which is where we saw resistance in the end of September. So keep your eyes on the inverse head and shoulder here forming on SPY. And for QQQ, let's pop that up. I'm seeing a nice rebound as well. Like I mentioned in the intro, the NASDAQ 100 went up 0.8% roughly, and QQQ tracks the NASDAQ 100. And what we're seeing here is QQQ is now trading above, and it closed above the 4-hour 50 moving average here. And we're noticing it's trying to fight and start pushing up towards the highs from about a couple of days ago, 365. And if it breaks that, we could start maybe pushing 370s, but I don't want to get ahead of myself here. We should not get ahead of ourselves in general because, let's be honest, QQQ is still well within the downtrend, and this could very well be a lower high, and we could dump off. Same thing with SPY. Just because we're seeing an inverse head and shoulder there doesn't mean that we're going to just shoot to the moon now. I mean, anything could happen these next couple of days. So keep your eyes out on those key spots. And going back to QQQ, I would say the most important level for this ETF is 360 to 365. That is where the bulls really need to get out of. If we start breaking into 370, 375 at that point, which is still 10, 15 bucks away from where we are now, at that point, we could be moving off to the races, but we're just not there yet. So be patient and make sure to hit the like button. If you guys haven't done that, hit the like button, drop a comment down below. Let me know your thoughts on the markets in general. And as you all should know by now, earnings season is upon us, and this is the best time in the markets, hands down, no doubt about it. You can't tell me otherwise because we got the biggest companies reporting, and today we had Delta Airlines, that is. We had JP Morgan, we had BlackRock, and this is just the start of the party, guys. Tomorrow we got some more stocks reporting, and in these next couple of weeks, in the end of October, we have some of the big dogs reporting. So let's talk a little bit about these stocks. DAL is Delta Airlines. They ended up doing adjusted EPS of 30 cents versus 17 cents estimated. So they crushed EPS, and revenue came in at $8.28 billion versus $8.4 billion estimated. So they beat EPS, but like I just read to you guys, they missed revenue, and the stock is feeling it, guys. The stock went down almost 6% on the day, and that is after it saw a huge move in the past couple of weeks. I mean, ever since the middle of September, you guys can see here, Delta went from $39.40 per share all the way to 46. That's a pretty big move of about 12 to 15% in just a short amount of time. We're talking 3-4 weeks, right, guys? Actually, it was 2 weeks because it ran up from the middle of September into the 1st of October, which was about 2 weeks ago. So literally in 2 weeks, Delta ran up almost 15%, and now it's given back a lot of that gain. Most of it, actually. You know, it's down from 46 to 41. It's down about 11%. And with those earnings that came out, quite honestly, they weren't that bad. I mean, they beat EPS, but again, they missed revenue by a very small margin. I feel like once the dust settles on this one, it could end up being a dip buy. We have to wait and see whether or not buyers step in around $40, $41, $42, right around the 180 SMA on this 4-hour chart. And if they do step in, hey, this could end up rallying back up mid-40s, maybe even higher in due time. So watch out for DAL. JP Morgan is another one that I've been on record saying is probably the best bank, and I'm not the only one that said that. I mean, a lot of people say that, a lot of analysts, a lot of big-time investors talk about that all the time. They ended up doing pretty well with earnings. EPS came in at $3.74 versus $3 estimated, so that was a beat. And revenue came in at $30.44 billion versus $29.8 billion estimated. And overall, company-wide revenue rose 2% to what I just said, $30.4 billion, mostly driven by booming fees in the firm's investment banking and asset and wealth management divisions. Net interest income came in at $13.2 billion, edged out the $12.98 billion estimate on higher rates and balance sheet growth. Fixed income revenue dropped 20%, so maybe this could be a reason. Fixed income revenue dropped 20% to $3.67 billion, below the $3.73 billion estimate. But equities trading revenue more than made up the fixed income revenue shortfall, producing $2.6 billion, beating the $2.16 billion estimated. So makes sense. Equities trading, a lot of people are doing that these days, guys. So yeah, maybe the stock is falling a little bit due to the fixed income revenue drop of 20%. But other than that, for my brief analysis here, I don't know why the stock is falling. I mean, they beat EPS, they beat revenue. They're growing a little bit here year over year, and the stock is down 2.6%. It went down 2.6% on the day, and it's trading right around that 180 moving average, which we've seen buyers step in over the past couple of weeks, 2.5 months to be exact. So let's see. Very similar to DAL. Let's let the dust settle. What's going to happen? Are buyers going to step in at 160? We'll see in due time if they do. If we see consolidation and a pop, or are we going to just fall right through the floor here? Is the selling just beginning? You know, maybe we do start going low mid 150s again. And the truth is, it's just too early to tell. That's why we need a couple more days of trading, at least 1 or 2 more days, because right now it's still a falling knife. So let me know your thoughts on JP Morgan. Do you own it? I'd love to know. Drop me a comment right below right now, guys, in the comment section. And let's talk a little bit about BlackRock, BLK. Let's pop that one up. This one actually went up, believe it or not. DAL, JP Morgan crashed. Well, not really crashed, but they went down a little bit. BlackRock went up almost 4%. So they did adjusted EPS of $10.95 versus $9.35 estimated. So they beat EPS, and revenue also beat. Revenue came in at $5.05 billion versus $4.9 billion estimated. And I think I was reading earlier that one of these firms adjusted their price target. And by the way, the stock is now $867 per share. And let's see here. I was reading it earlier. Where the heck did that go? One of these guys, man, they pushed it up to $1,000+ and they reiterated a buy rating. Oh, here it is. Deutsche Bank. Deutsche Bank adjusted BlackRock price target to $1,039 from $1,100. So they actually dropped the price target, but they're still maintaining a buy rating. So that's pretty much what really matters at the end of the day in terms of that analyst saying, okay, buy rating, even though they cut the price target, they still think it's a buy, and it's well under that 1039 price target that they have. So overall, BlackRock is breaking out of the 50 SMA on the 4-hour chart, and it's pushing up now to test the 180 SMA, which I believe could clear here in the next coming days, next 1 week, 2 weeks, and from there, we could be off to the races, right? And if I pull up the yearly chart, what we're noticing is we're holding a higher low at about 800. We're pushing mid-high 800s right now, which is a solid sign. The overall uptrend's continuing. And on the 3-year chart, we're holding the 50 SMA, which has been support over the past year and a half at this point. So I think BlackRock buyers are stepping in. I think the uptrend is going to continue based on what we're seeing right now. And Microsoft is another one that I'm looking at. MSFT, let's pop it up. I'm seeing a clear-cut inverse head and shoulder on this. We have the left shoulder, the head, the right shoulder, the neckline's at about 291, 290. Now we're pushing up to the mid-high 290s. We had a 1.2% green day just today, and this one's on the brink of breakout. No joke. If we start breaking out of this 180 SMA into the 300s, at least here on the time frame, the 4-hour chart, this could start pushing all-time highs again. And in fact, now that I'm looking at it, it's not too far off. I mean, it's only $10 away from all-time highs, or around 3%, which is really nothing, right? 3%. That's nothing. These tech stocks could move that in a day. So I'm going to put my alert at 300 on Microsoft here. We're going to watch it. Actually, let's put it at 298 because every dollar counts on this stock and any stock for that matter. So let's put it at 298. Mark is at or above. If it starts breaking out, we could make that move to all-time highs, maybe even higher. And it's crazy considering a lot of these other big tech names, they're down a lot more than Microsoft. It's down a measly 3% from the all-time high. I mean, Facebook, don't even get me started. This one's well into correction territory. It's almost in a bear market. It's down about 16% from the all-time highs. Apple is down, let's see here, Apple's down about 11%, so that's in correction territory. Amazon is down a good chunk as well. Let's pop it up and see. Amazon's down 14%, so that's in correction territory. And I know Google is not down as much as any of these guys, but let's see what it's down. Google is down, about 6%. So still, Microsoft is holding up very well compared to the other big tech names in terms of its peers here, you know, the FANG stocks, which I don't even really count Netflix and the FANG stocks. You know, that could be debatable, but let's pull Netflix up. We already know. Well, it is in the FANG stocks technically, but I don't really consider it that, to be honest. You know, call me crazy. Netflix is down about 2.5%, but still, I'm not considering that in terms of these big tech names. But I don't know. Let me know your thoughts on that down below. But it's funny to see how, it's interesting to see. It's not really funny, but it's cool to see that Microsoft is holding up pretty nicely. So what are your thoughts there? Drop me a comment. Let me know. Domino's Pizza is another one that I'm looking at tomorrow. They report earnings in the morning, pre-market. So that's going to be one that's volatile in the morning. And yeah, we got to see what they report. You know, I told you all in my previous video that I covered Domino's Pizza. I ate this stuff way too much when I was in college. And let's just say every time I ate this stuff, I regretted it the next day. I'm not going to get into detail there, but Domino's Pizza, nonetheless, doesn't matter what I did in college, and I'm sure a lot of you guys did the same stuff in college. Domino's Pizza, it's a pretty good business model. It makes a lot of money. A lot of revenues, profits, all that good stuff. And I want to see what comes out tomorrow because we're currently down about 13%. We're in correction territory. We're downtrending. At least we have been the past couple of weeks. I mean, don't get me wrong. Overall, in the past couple of months, we're uptrending. But ever since the end of July, the stock's kind of been in the toilet. So let's see if it reverses. Let's see if it holds this uptrend at about 475, 500. Let's see if we start making a move back up. So DPZ, quite interesting right now. CrowdStrike, CRWD. Did we not call this out? I think yesterday or the day before, this played out beautifully. It went up 7% today. It went up almost $20 per share. It completely and utterly broke out of both moving averages and the wedge here, and the inverse head and shoulder that we called out also played out. You guys can see the left shoulder, the head, the right shoulder. So this one, even though it's overbought, I'm looking for any little mini dip within the breakout here as an entry point because quite honestly, I think this one is now on its ways back to those all-time highs. Very, very possible. So, yeah, keep your eyes on it. But, again, it's a little overbought, so maybe we'll see a pullback to about 260, 265, and that could be the entry within the overall breakout. But as always, guys, please do your own research, your own due diligence. Don't buy based on my opinion. I'm just some guy on YouTube going over my analysis from years of doing this stuff, my thoughts and opinions, and I really hope you guys value it. And if you do, if you didn't do it already, make sure to hit the like button. Let's talk about the last stock here, which is Mara, ticker symbol MARA. This is a cryptocurrency miner, right? It's very heavily involved with cryptocurrency, and the stock's been doing well because a lot of the coins out there have been on fire. I mean, Bitcoin is back to the mid-high 50s right now. Ethereum is crushing it. It's close to 4,000, I believe, 3,500 to be exact right now. And let me pop it up on Coinbase. By the way, if you guys want $10 from Coinbase, free, it's down below. Use my link. You get your $10, and thank me later. So Bitcoin right now is at 57.3. Ethereum's at 35. XRP is $1.11. Litecoin, $176. And what's Dogecoin at? The good old Dogecoin. Let's pop that up. Dogecoin's at 23 cents. So overall, crypto has been ripping recently, right? Especially Bitcoin. It's been on fire, and Mara has made a heck of a move the past 2 weeks. It's gone from $31. Now it's trading in the mid 40s at about $43, $44. So that is a move of about 20, almost 30% in the past 2 weeks. And now we're at a pivotal spot, $45 per share, which was that resistance point from the beginning of September, just about a month and a half ago. And I think this is the next spot that clearly, if we break, we're going to see the next leg up, whether it's to the mid 50s, low 50s, high 40s. I have no idea. But all I do know is if we start breaking 45, I think there's a new wave of momentum that's going to come in, especially, guys, especially if Bitcoin is able to crack 60K and start moving higher. I think Mara, I really do. I think it's off to the races. $55 on the high end, maybe 60. Who the heck knows? But I don't want to get ahead of myself and say 60. Oh, it's going to 70, $80. I mean, who knows? All I do know in the short term is, though, 40, 48, 50, 52, 55. It's not too far-fetched. So let me know your thoughts, guys. I'm going to wrap it up here. If you guys enjoyed this video, let me know your thoughts. Hit the like button, subscribe for more, and check out my Patreon. If you guys want my buys, sells, call-outs, morning update videos, literally everything I'm doing in real time, I put it on Patreon. That's linked down below, or you guys can go to stocksurfest.com/Patreon. Make sure to also get your $30 from M1 Finance or 2 stocks from Webull, your $10 from Coinbase. All of that's linked down below as well. And that's it. I'll catch you guys in the next video, which I'll pop up here. If you guys want to see my video from earlier going over the CPI data, click that, watch it. I'll see you there. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.